All right, hey traders, TG Watkins here. It is March 28th when I'm recording this, and this is going to be the class list of the things that we go through. I know it looks a little bit long, but most of it's going to be conversation at the top. Remember, this is for educational purposes only, and I hope you guys are doing well out there during this market. It's been a little tumultuous. We are going to link, I just had a webinar 2 days ago on Wednesday talking about this market, also talking about how we're trading it, the successes we've had, the challenges we've had, and then also how I'm using the Moxie indicator to navigate all this, and the class that I'm going to be teaching April 5th to show you guys how to trade with the Moxie indicator, zero DT trading, that's going to be another class that's included, and then how I use ETFs and leverage ETFs to also have the market tell me what's going on, and that's going to be another segment of the class. So we got three things all wrapped up in one that's going to be part of this class if you guys are interested in it. So we'll put a link down to the bottom. All right, so some things to discuss. We're going to be talking about, let me pause this for a second. So we're going to be discussing quarterly rebalance. That might be part of what's happening here. Obviously, I think the market's going to be heavy on its own. Some people are talking about quarterly rebalance, so just be aware that it's out there. Today, consumer sentiment and inflation expectations came out. Both of them were worse. So consumer sentiment was down, inflation expectations were up, and that seemed to be what really got the market going today. So yeah, that's kind of another big thing. Remember that tariffs are supposed to be enacted April 2nd, and that's next Wednesday. So potentially there could be time for decent news or less bad news to come out, because if you guys recall, and we look here, the market was, I thought, primed to move up, and we got the move we were looking for right here and right into basically the daily 21, and that happened over the weekend based on less bad tariff news. Okay, so it is entirely possible that all of this damage that is occurring could get turned around, or we could get a balance if the administration says something decent about tariffs. So just remember that. It could also get worse if they say something. Okay, so we just understand that this market is extremely news driven right now, mostly about tariffs, and we have that thing coming up on April 2nd, which, I don't know, it could be something like buy the rumor, sell the news. The rumor is, okay, we're getting all these tariffs enacted, and the news is, okay, they're here, and maybe the market's like, okay, fine, then we kind of bounce a little bit. Really hard to say. If we're going to, I'm going to show you a couple different paths of what this market could look like over the next several sessions, and what to expect if it's going to be bullish or bearish. Okay, I want to give you guys both directions just in case this market kind of gets a little bit crazy in either direction. So yeah, I'm going to show you guys some double bottoms, but we don't know if they're going to turn into bear flags. Okay, because remember, a double bottom only works when it works. Otherwise, it's a resting area until price moves lower. And so basically it's a failed double bottom. So we have that, or it could be a bear flag. I have some examples that we can talk about. And then given that this is the Moxie indicator and how I trade, I have a lot of potential trampoline moves on the hourly chart. If they work, that is a very bullish situation. It's basically a buy the dip. So here on the SPX hourly, you can see when price is below the 50, but the Moxie indicator is above zero, that is a potential trampoline move. And I have to say potential because it hasn't triggered yet. It will trigger if price can go back up over the 50 and the Moxie indicator goes red. So we don't know if this is going to happen yet. It's just a current situation. It could continue to fail. We're going to be watching the lower time frames. I've given a lot of guidance on how to watch for this, and this is the stuff that I teach and coach, and I'm going to be helping you guys understand how to recognize this on your own in the April 5th class. All right, and then I'll get into these two. We have been trading around this. We've had some successes. We've had some tickers that we've gotten stopped out, like LMND, Root we're still in. I don't know, a couple others that we've gotten stopped out. Smaller size, but fortunately we've had some really good wins. So Tesla, we got 37% gain on that. Genie, we had an 18% gain on that. GDXU, we had a 29% gain on that. FNGA, we had an 18% gain, but now we're down 8%. So we sold half, and now we're down 8%. And SPX, we did a couple monthly option trades on that, and we made 50% and we made 35%. So all in all, we're doing all right. We're navigating this market pretty well. And at this point, I'll show you what I'm looking for, and we're going to see if we can get kind of a bounce in the market. So remember, a lot of people are kind of concerned about margin call Monday. That's kind of been the talk right now. I don't think it's going to necessarily be margin call Monday because I think everyone is kind of already understood of what's happening. Usually margin call Monday happens when, when the first thing starts and it takes everybody by surprise. This isn't surprise anymore. And I don't think a ton of people are leveraged to the long side to where just because we've gone down, 2.5 days, that they're going to be like, oh my gosh, suddenly and now I'm in trouble. Okay, so that's usually kind of what I think about margin call Monday. I don't think it's going to happen. Now, what we could do is I believe that there's a JP Morgan collar trade down here at 55.65, so just a touch below us. And given how heavy today was and that we're going into the weekend, we could certainly open with a little plunk down. We could go a little bit lower, certainly. We can go a lot lower, who knows? But I do think that if we come down, I want to see if we can hold. We're going to have to see maybe what kind of tariff news comes out, and I'm looking for price to hold in through here. I can't confirm it yet. I want to make very, very clear that we don't know yet, and I'm just looking at these things as possibilities, and I'm going to show you what that looks like. So if we can come down here, if we retest, here's where it will be bearish. So a bearish bounce will come back up here, run into resistance, and then will eventually fail lower. That's going to be a bearish bounce. A bullish bounce would be if we come up here, we come up like this, and we're actually able to go higher, okay? I'm still roughly targeting the daily 50 if we're going to be bullish, but if we're going to be bearish, we're just going to kind of do this, and we're going to continue trending down, okay? So we have both possibilities in our mind. Let me show you a little bit closer of what that looks like. So CCL, and this is some of the examples that I went over in my live session today on the mic in the room. So just kind of hone in through here, kind of show you a couple right here. So what I'm looking for is, you can see here is an area where back in the day, CCL double bottoms, okay? So it is very possible that after a big couple of down moves like this, which is what the market's doing right now, can come into a double bottom and can move up. And part of the reason I'm pointing this out is because this was a trampoline move. See here on the hourly how price was below the 50, but the Moxie indicator was above 0. That's a trampoline move. We are potentially in that today with a lot of the tickers that I'm looking at. I'll show you as we go through them, but I'm seeing a lot of potential trampoline moves on hourly charts. So that would be a bullish bounce. N&E, I was kind of looking around, and let me see if I can get enough. Yeah, I got enough distance here. And you can see, look at that double bottom right through here. So back here, there's your double bottom, and it worked. And you can see here, double bottom. Now, this was not an official trampoline move because the Moxie indicator did cross below 0, but for all intents and purposes, it was pretty darn close. And basically, you have your level, you do have your positive divergence. The Moxie indicator just barely dipped below, and then we started to move back up. So that's kind of what I'm looking for. Again, today's Friday. We had the big move. It's way too early to be telling if we're going to be bouncing from here, but it is something I'm going to be looking for over the next few days next week. And if it doesn't happen, then I think we do need to be prepared that we're going to run into resistance and the market could move lower. So what would that look like? Well, here's another example. I was using this in my presentations last week. Here is an example of a bear flag that chopped and resolved lower. And there's kind of a combination of factors in here. So if we actually look at this a little bit closer, if the market is going to go lower, it could do this, which is a combination of both. Here's a double bottom, here's a bounce, but eventually it chopped and went lower. Okay, so I hope you guys kind of see what we're looking at in through here. And part of the reason I'm saying that we could do both is because you can see here how HNST, again, this is just a chart for an example, came down pretty hard, and the market did that too. Market came down pretty hard. In fact, you could even see here, came down pretty hard again, but it was finding a level, and there were these occasional bounces. The unfortunate thing is that they were bearish bounces. They kept running into resistance. The ticker really couldn't go anywhere, and it eventually resolved lower. So that is why I think we could really honestly get either one of these, and that's what we need to keep watching every day. On mostly for me, the hourly and the 15-minute time frame is going to tell me what we should expect. But yeah, there's your double bottom, there's your bounce. If that's what we get coming next week, then great. Then we have our trades on, we can cash in up here, and then we can just start over and let things go. We'll just have to see if we actually break down sooner than later, okay? Because if that's going to happen, then yeah, it's going to be a little bit of a problem, and I'll have to get out of a few things. But I'm kind of hoping we get a bounce first, okay? A weak bounce would be like this into resistance, and then we continue to roll over from there. So I've done a pretty good job, I think. Let me know, those of you in the Moxie room, if you guys need more explanations as far as what we're looking at with all this. But those are my ideas in through here. All right, so if we just look at the SPX generally, we'll kind of recap this thing and kind of over here, and you guys can see why I'm looking at potential, okay? This was a major low. We're right there. We could go a little bit lower, but I do wonder if we're gonna move up. Again, if I'm wrong, then maybe we bounce a little bit and then we could roll over. So keep all of these things in mind for where this market may or may not go. That's the SPX. I'm also looking at here on the, see how price is outside of the third ATR. The only other time on this recent down move that we saw price get outside of the third ATR was basically when this whole thing started. So that was like when things were fresh and everyone's like, oh my gosh, you know, we need to sell. Then we really got price outside of that third ATR. Other than that, every time it got to the third ATR, we saw a bounce, you know, bear flag, bounce, something like that, something. And here we are, very oversold and also at a previous low. So again, I'm kind of leaning toward bounce. I hope it happens, but I am prepared if it doesn't. And then if we look at the NASDAQ, same kind of deal. There's no information as of today about what to really expect next week, except that we are down here at previous lows. You know, if something happens and this market really is super low, hey, sure, you know, people are selling and hitting the eject buttons, totally possible. But other than this, we've had a pretty big down move in through here, and we'll see if this is going to act as any kind of support. And you can see even the NASDAQ has a potential trampoline move right in through here on the hourly time frame. We can also look at the IWM. Now the IWM, I think I have this drawn up, that there is a major level that is here. All right, and so if you look at here with the IWM, and you can see that we have this line, there is a major level with this line that we have. You can see there was a really big area right in through there. You can see top, 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 and then we had another big area in through here, and we are sitting right on that. So again, we don't know if this is exactly a point, but the market, if this is going to end up being a level where the market can bounce from, we do have a few things out there that are starting to look as possible causes or reasons. Again, way too early to tell this, but it's a possibility. This is also a double bottom, and we have another potential trampoline move here on the hourly time frame. And then let's see if we look at the FFTY. This is the IBD50. And this is another thing that I've just kind of been looking at. And the interesting thing that I'm noting here is surprisingly relative strength, actually. The IBD50 is actually up here. It has a higher low compared to the S&P or the IWM or anything else that actually has a equal low. And so there's something that might be here. Same thing with Tesla. Tesla's actually kind of in this position as well, where Tesla is actually holding up very well. And so this is where I want to see that maybe these pullbacks, if they can hold support, maybe that is what helps us get a little bit of a move to the upside. We were prepared for the pullback because right here is where I was expecting there to be resistance. We sold out of our Tesla trade, our FNGA trade, SPX trade. We took profits and we sold out of our long trades when they came up here, and so we were expecting the pullback. And now we just have to see, is this pullback into weakness or into strength? So there's the IBD50, and we can even look at the ARKK, and very similar to where it is, just barely, but it is putting in a higher low. So again, it's got a higher low compared to the rest of the market. Just something to be aware of. And once again, we have a potential trampoline move on the hourly time frame. So yeah, just kind of watching some stuff and seeing some divergences show up. If we look at the Dow, let me zoom in. You can see here the Dow is also sitting on another major level in through here where it first bounced, and we're trying to kind of do a double bottom. You could say maybe a higher low, so that's a possibility. And once again, noticing a potential trampoline move here on the hourly chart. Too early, can't say anything about it other than potential. And then if we look at the SMH, the semiconductors have been very weak. Okay, definitely weak. We've been looking at NVIDIA, also very weak, but you can see here this is at another area where there's a big level, and it's right here. So maybe this is going to act as some support. Like I showed you earlier on one of the tickers where I think it was what NNE or HN, maybe a CCL, where it wasn't a perfect trampoline move. Like the Moxie indicator had just dipped below the hourly 50, but then turned back up. So we're still watching this to see if it's going to do something like that. But mostly what I'm paying attention to is this double bottom potential, this double bottom area. Okay, so there's SMH. And I think that kind of takes care of most of the macro indices of what's going on. And then if we look at the put call ratio, here's another thing that happened today. So if we look closely, the put call ratio basically hit 1 today. And we're going to have to see what this wants to do as it carries into Monday. But usually when the put call ratio hits 1, that does help mark the bottom, because basically everybody is loaded up on puts as a way to hedge and also trying to take advantage of the market going to the downside. So the fact that it hit up there, maybe we're close to a bottom. Again, there's a whole lot of ifs, ands, and maybes. I don't have anything concrete right now, but I'm interested to see if any of this will actually resolve to the upside next week, or if this is just going to be a very, very weak bounce and we actually roll over sooner. So that's the put call ratio. And then if we look at breadth, let me come over here. I can show you this, and let me refresh it to make sure we have the closing data. And the things that I've been talking to my subscribers about with this is that we've noticed that overall the market made lower lows, but notice how breadth made higher lows. Okay, so something I've just kind of been watching out there, and we did actually start to see the 20-day SMA breadth start to recover. And remember, the S&P is basically at a double bottom. It could go a little bit lower, but notice how the 20-day breadth is actually higher. And we can even see just barely the same thing with the 50-day SMA. So even though the market is rolling over and going back to where it came from, a lot of other stocks are not necessarily doing the same thing, at least according to this. And so that's kind of one breadth indicator that we can kind of watch and see if that's going to be doing much. All right, and then here was the other interesting thing that I was seeing. And this is, again, a bunch of hypothetical that I'm looking for, and we're going to see if this actually starts working out the way that I think it might next week. So all I can say is what I'm looking at, but we don't have any confirmation yet. And what that is when the market or when a ticker is ready to go up, the way that I trade is it has to follow the moving average, and the Moxie indicator has to be above 0. So notice this with UVIX. When the market was moving down and the UVIX was moving up, notice how price was engaging with the hourly 50 SMA, and that was a nice trend. I mean, look, that was a great trend, wasn't it? And notice how the Moxie indicator was above 0. That's perfect. That's what we're looking for. Also notice how the 8 was over the 21 on the daily chart, and we got to move to the upside. Okay, so what's happening today or over the last 3 days? Well, the UVIX is going up, but notice that this is not an official uptrend. This is price trying to go up across a downtrending moving average. And notice that the Moxie indicator is still below 0. This is not technically a official long setup or trend for what I'm seeing. So notice how the 50 is still below the 200, and notice how the 8 is still below the 21 on the daily chart. So if I were to look at this as a normal stock, I would say that this is a bounce. And even if it was going to go up later, I would have to see this thing pull back before going higher. So this is another one of those reasons why I am cautiously thinking that there might be a bounce next week, because this is not entirely officially set up to the long side. We'll see if I'm right, okay? We'll see how well this ages, and if I've got to eat my hat next week or something like that. But that's something where I'm watching and see if that's going to be doing anything for what I think it might. Okay, and then that's basically the UVIX and the VIX. And then I want to show you guys Tesla, because we really did a great job getting the low on Tesla back here. So we got TSLL, and then we sold half of it right there. Again, perfect situation. This is what the Moxie indicator and the Moxie methodology teaches you guys. Everyone in the Moxie room was able to see this and the reason why we took half off right there. And then since then, the Tesla has pulled back to exactly where we thought it would, which is the hourly 50. It can go lower, but this is the pullback that I want to see. And if this pullback is bullish, it's going to pull back, find support, and then we can move up here. And of course, it's going to take market support in order to have this thing go anywhere and do anything. But we were prepared for the pullback, which is why we sold half here, and we sold it at TSLL, 37% gain on that. Okay, so that's Tesla. And then if we look at Genie, there's one of the few trades that was working out there. We really narrowed our focus. I was only looking at a handful of stocks over the last few weeks to see what was going to be doing well and what wasn't. Once again, trampoline move. Here's price below the 50. Here's the Moxie indicator above 0. This thing took some time to kind of work out, but finally it held and then shot up. And you can see once again, I do a pretty good job nailing the tops of things. And right in through here, you can see about 17-18%. We took half off because, well, this thing's still in an uptrend and I want to see what it can do. But we took profits on there, and I'm glad we did because, it's come down since. But that was a pretty good place to exit. In fact, just about perfect because we nailed the top as far as the pullback then. And then if we look at GDX and GDXU, we traded this one. Again, very clean setup. We entered right there, and then we got a nice clean shot to the upside. It kind of bold flagged into the hourly 50. And the reason I actually decided to take profits on this one is because, let me get over here. If you look, you can see that that price right here is at a previous high. And so there could be some natural resistance there. We're also up here at the 30 ATR and getting a little bit stretched on the weekly, so it just seems prudent. And we have been kind of running up here on the daily chart, and it might be good for a pullback. So in this market, it's healthy. It's you got to be nice to your account, and you want to cash some profits in when you can. So what we did is we traded GDXU, which was the leveraged ETF of the GDX gold miners. And so we got in here, and we're up here, and you can see about 29%. So we took in profits on that. That's pretty nice as well. Okay, then FNGA. This is the leverage ETF of the FANG stocks. This is going to look exactly like the market, basically. We got in here. We sold half here. That's plus 18%. And then I was a little early. I did add back into here, and now we're down here. And so if we take the spread between here and here to here, it's down about, I think, 7 or 8%. So there was 18% on the upside, and now we're down about 8% on the remaining portion of what we had and then what we entered. And so this is, we'll have to see if I'm right about this double bottom holding, and then we can kind of move up from there. But fortunately, we've kind of built some cushion with our account and on some of these other names that we took. Okay, well, I think that pretty much wraps everything up with you guys. So just kind of make sure you can see what we walked through and talked about everything. Remember, link is in the description about the webinar that I have coming up and the Moxie class, because it is still possible to trade through here. It's a little bit more difficult, but you want to make sure that in times like this is where you can practice, you can use on demand, and you can go back to when times are a little bit better and smoother, and you can learn this new trading system if this works for you, the Moxie indicator, and then that way you can get ready for when this market goes. Because I tell you, I was able to more than double my account in 4 and then 5 months at the end of 2024. So as long as you are ready for when the market is better again, which it will be at some day, then you can just hit the ground running. You'll already be practiced and well versed in the Moxie indicator method, and you can take off when the market takes off too. Okay, guys? Well, thanks again for your time, and we'll see you this coming week. Take care.